You co-founded a fund called SpaceVC, which invests in frontier tech companies at pre-seed, which is an impossible task. Tell us about some of these companies you were the first check in.
As you mentioned, we're a part of 20 incredible companies' journeys, and a few of those have already emerged as breakouts. One of those is Castalian in the defense tech space. The other one that stands out in our Fund 1 so far is a company called Anomaly. In Fund 1, our pre-seed to unicorn hit rate is almost 20%.
That is better than the Thiel Fellowship so far.
All credit to the founders. To be very clear and unequivocal, being a founder is harder than being a VC. Starting a company is such an audacious, ridiculous, courageous thing to do. What's most important to me at the end of the day is a super unique insight and a right to win.
Jonathan Lacoste, welcome to the show.
Thanks so much for having me.
We're in your hometown and, probably, allegedly, maybe my hometown.
Soon to be.
Soon to be. Austin, Texas, the great city of Austin. And also, so we can actually start on Austin. 2020, 2021, Austin was supposed to be the place. This was the next Silicon Valley. And Miami was like a small contender, but Austin, everybody was moving to Austin. Everybody left the Bay, everybody left the coast. All the tech headquarters were moving. Facebook was setting up this new building, and then they became Meta. So I don't know, maybe it got lost. What's the state of Austin startup land? What's the state of Austin tech? Where's Austin 4 years after that? I guess mini hype cycle we sort of lived in.
Yeah, look, there was definitely a lot of excitement around Austin in that period, but I think there's durability to it, and we've come out the other side, emerged, especially compared to Miami. There's really no comparison at that point. I think Austin is firmly number 5 in American venture capital cities, where the Bay Area, LA, New York, and Boston are kind of 1 through 4, and obviously the Bay Area being far and away for kind of AI-oriented things, right. LA establishing itself as a deep tech hardware-oriented hub, aerospace, defense, energy, New York being a little bit more crypto and fintech-oriented, and Boston having a great legacy of robotics, med device, pharma, biotech. What's beautiful about Austin is it's kind of emerged as the clear number 5, and it has a blend of all of that. And I think Austin, just given the proximity to great universities here, but also just space and land and energy, you're finding a lot of exceptional deep tech companies are coming to Austin and building here. So you have Base Power, who's just announced very recently
$1 billion round.
$1 billion round to bring battery manufacturing back to the States in here in Austin. You have Allo Atomics on the nuclear side. You have Aptronic on the robotic side. Saronic building kind of UAVs and surface vessels for defense. So Austin is a more concentrated ecosystem than LA, but has clearly emerged as one of the important venture hubs in the States, especially after COVID.
I think I was seeing a chart on Twitter. There's so many of these charts on Twitter, but Austin has somehow become a hub for growth stage deep tech companies, not early stage, but growth stage. Companies seem to want to have a big presence here or a HQ here. So yeah, for sure. That's a thing. Well, you co-founded a fund called SpaceVC, which invests in frontier tech companies at pre-seed, which is an impossible task. And that's how we met. Maybe a couple of years ago, we were at an event here with a ton of government officials, and we were talking about how, it's hard to find even 2 deals you have conviction in. So let's just go over the state of pre-seed frontier tech. I think I sent you a couple of charts. SVB published this report where in 2024, only 19% of total funding of all sectors went into frontier tech, what you could categorize as frontier tech. Q1 2025, it was 21%. I haven't checked Q2 yet. I think they recently released. Carta did. These are Carta reports, sorry, not SVB. SVB's different state of frontier tech report. And then according to the SVB report, 38% of funds in the last year raised with the hardware thesis. Everyone has a defense partner now in their firms. And we are probably a couple of years into this micro-American dynamism cultural movement. At the same time, there was an EEC, micro-cultural movement in Silicon Valley or tech. And maybe people who are outside of our bubble don't even know, what these things are, but it's like billions of dollars, being deployed. So like they are sort of important. Yet the number of deals per year and new company formation is going down. What's happening?
There's a lot to unpack in pre-seed land. I think your point is probably the most pronounced one around concentration into fewer deals. And I think that really comes down to talent flows. At the end of the day, even though capital has exploded both at the growth stage and early stage, venture has always been an outlier business. And so capital continues to compete over a small handful of exceptional companies. And especially in pre-seed land, where pre-seed is an optional stage sometimes for founders. Some companies are emerging from stealth or on, inception stage, raising tens, if not hundreds of millions. So there's been many different paths to pre-seed and beyond. We definitely have seen, though, that LPs have become more comfortable investing in frontier tech-oriented funds, which I think is really important, not only from a national strategy standpoint, but in my opinion, and part of the reason I launched the firm to begin with was I felt venture had over-rotated as an asset class towards only investing in B2B software, mobile apps, consumer-oriented businesses. And if you just look at, GDP of the US or kind of the global economy writ large, obviously there are significant physical hardware-oriented industries that were ignored for many years, even though venture arguably had its roots in the 50s and 60s in many of these deep tech ecosystems, in semiconductors, in defense tech. And so it's great to see the pendulum swing back towards that. It's wonderful to see both large firms embracing frontier tech and emerging firms establishing themselves to invest in this. And yet still, with all that being said, at least as it relates to certain sectors within frontier tech, space and defense being two great examples, our personal belief is that the winners in those sectors will be even more of a monopolistic outlier effect than in traditional SaaS or AI.
Yeah.
And so part of the reason I think you see the concentration of deals is because there's a recognition that it takes a truly special founder and founding team to break out in the kind of from the early challenges of pre-seed frontier tech building and to become one of these, next generation unicorns or decacorns.
What are actually I should have given a better intro. You were a founder before this.
Yes, yeah.
Right. And you raised more than $70 million and you had I don't know if this is publicly disclosed, but you had a multi-$100 million something, hundreds of millions of dollars in exit, right? You became hopefully after returning capital back to investors somewhat wealthy.
Yes.
So you could write some of these checks yourself, right? Tell us about what companies did you invest in? These are some of the category leaders or are now becoming category leaders. They're raising hundreds of millions of dollars, and you were often the first check in these companies. Tell us about some of these companies you were the first check in.
Yeah, I think in general, I approach venture capital with an entrepreneur and a founder mentality.
Yeah.
And a lot of that comes from being a founder. In our founding journey, to be clear, although it was successful at the end, was not up the easy side up the mountain. We encountered almost every discernible challenge or friction point or pivot or, almost running out of cash moment or big customer churning. And so through that experience, which was almost a decade, I just emerged with a ton of scar tissue and empathy. And I think at bats to help entrepreneurs, especially first-time founders, regardless of how seasoned they are in their field, understand what it's truly going to take to build an exceptional company. So I take that, and then when I work with some of these category leaders, it's a great privilege to work with them, to be honest, because almost every founder that I interact with, certainly probably all founders, are smarter, more knowledgeable, and have a deeper expertise in a particular category than I've ever built something in before. But being a thought partner to them to think about how they should think about crafting their team early on, how they raise capital, understanding their product strategy. I really like to lean in on the commercial go-to-market, talent recruiting, and product feedback cycle. Yeah. I'm not an engineer by training. I've spent a lot of time in the past 5 years in manufacturing facilities and on the shop floor, helping our founders understand their product and how they scale it. Right. But at the end of the day, I think from a VC standpoint, we have been most helpful by making customer introductions, capital introductions, government introductions, and helping recruit and close talent. And so, as you mentioned, we're a part of 20 incredible companies' journeys, and a few of those have already emerged as breakouts. One of those is Castalian in the defense tech space. It was a pleasure to be the first investor in the company. I met Brian as he was spinning out from SpaceX, and the company has done exceptionally well. And
it's unicorn now, right?
Yes, yeah. They recently have closed 350 million. And
Yeah.
so, I can't comment on specifics, but
Yes,
they're
yeah.
doing quite well.
Yeah.
We were
But
also,
unicorn by this was the definition. Yeah.
yeah,
Yeah.
I'll let you say that.
Yeah.
And then I think, the other one that stands out in our fund one so far
Mm.
is a company called True Anomaly. In the
yeah.
space defense ecosystem,
Yeah.
we invested in the pre-seed alongside Peter Thiel, Thielcap, and a former guest of the show, Colin from Naria.
Yeah.
He was in that one as well. And so, we've been lucky to be, and there are a ton of other companies we haven't even announced yet that are stealth that we think are the next generation of those. But we've been lucky to have.
If I'm not wrong, True Anomaly is also almost a unicorn version.
They recently announced a Series C from Excel.
Right. This has to be an insane hit rate. You invested in 20 companies, and we've already covered 2 unicorns and probably like 8 more on the way.
We haven't publicly disclosed our data yet, but I think you can ascertain from looking at the portfolio companies that are listed on our website.
Yeah.
When we invest at pre-seed in our fund one,
Were you like one of the first checks in these founders? In some of these companies, I know not all.
Yeah,
but like,
in True Anomaly, we invested at the pre-seed round.
Yeah.
And Castalian, we were the very first check before the pre-seed round.
Wow.
And so this is where we live. We live at inception stage. I spend all my time seeking to meet exceptional founders as they're spinning out from these companies. Brian was from SpaceX. The True Anomaly guys they were actually in government at the Department of Defense and Space Force, Space Systems Command.
So what's the secret here, Jonathan? Do you camp outside Starbase, and is that why you moved to Austin? And then the other half time, are you camping outside DoD? And you're like, listen, dude, are you starting a company?
Luckily, it's been a little bit more invited than just the the aggressive camping outside move. But maybe I'll try that. I haven't done it yet. I believe in good karma, and I believe in providing value before you ask for something in return. And so our approach to finding great founders is to go above and beyond for our existing founders and to make them feel and continue to deliver on any promise or any of the top strategic needs that they have, so that when one of their friends chooses to start a company or is thinking about starting a company, it's very organic and natural for them to think of us, not even from a financial investment standpoint, but as a thought partner, a strategic thought partner as they're considering starting a company. And of course, we only invest in a certain number of companies, so our network is much broader than just the founders we're investing in. So we have folks at SpaceX or Anduril or Tesla or other great companies that we have helped ideate on ideas, that we've helped introduce co-founders to, even if we've not invested, or even if it wasn't a fit for our firm strategy. So I spend a lot of time helping people go through the early iterations of that, just because I think from a national strategy standpoint, outside of venture capital, we need as many exceptional people building
100%.
New technologies in these categories as possible. So we've been lucky to partner with some exceptional companies so far. And I think in Fund 1, our pre-seed to unicorn hit rate is almost 20%.
That's insane.
That will be, time will tell if we can continue that.
That is better than the Thiel Fellowship so far.
I think it's also a law of small numbers.
Yeah.
But the all credit to the founders, but it's been off to a great start.
So is the next one going to be like $1 billion? Are you going to get carried away?
No, I'm actually a big
tempted?
fan. I'm actually a really big fan of small concentrated funds.
Interesting.
If you gave us $1 billion to run a fund strategy, I think the strategy fundamentally breaks. And that's a little bit of the issue with what's happening at pre-seed and seed today is the multi-stage firms recognize there's both an inherent interest in investing in some of these frontier tech categories and getting in as early as possible. They recognize there's value in investing at pre-seed and seed instead of waiting until A. And so they're looking to play more directly in these investment ecosystems. The challenge is, in order to move the needle for their fund size and their kind of mega fund strategy as it has emerged, they need to write a minimum oftentimes of $4, $5, $6 million checks. Or they're writing very small checks that doesn't meaningfully move the needle for them. And so you end up becoming a hedge as a founder. And so our approach, this isn't a firm number, but I've been talking to other solo GPs about this and other LPs that focus on pre-seed.
Yeah.
I think for a pre-seed only strategy, the fund size for a concentrated strategy kind of breaks around 70, 75 million.
Yeah, that's what.
Beyond that, you have to start adapting for other strategies, whether it's a growth strategy, whether it's a more aggressive reserve strategy, maybe a more formalized incubation or like labs approach and strategy.
I would say around 100 for like pre-seed to A, including the reserve capital, is like max you can justify.
Yeah.
For
if you're writing
early
seed,
stage.
if you're leading seed deals, and
Yeah.
certainly if you're playing at A,
Yeah.
there's an opportunity to be writing much larger checks. And so I do
Right.
think a $100 to $250 million fund can be supported, but then you're entering a new competitive arena.
Yeah.
And that's where I think the observation on venture capital is you become a bit of a tweener, where you're not an emerging manager, small fund, hyper concentrated early conviction checks, and you're not the multi-billion-dollar funds.
Right.
It's that middle that, not to say that it's not feasible, but I think you get squeezed on both sides and it can be challenging.
After the first fund, did you? Oh yeah, I'm guessing you raised your second fund last year, right?
Yes.
So I'm guessing some of these companies were already on this trajectory, right? They hadn't announced their rounds, but like maybe the writing was on the wall. Maybe it wasn't. Maybe it was after the election. But was there temptation to raise like a larger fund?
Truthfully, no. I mean, we went to market with a $20 million target for Funds 2. We raised that pretty quickly. It took about 3 months to hit the target, and we were oversubscribed. So we did raise more than that, and we hit the cap just under 25. But I felt that going anything beyond that would fundamentally change the thesis and the strategy of what we wanted to experiment with for Fund 2.
What is the thesis that you're experimenting with?
To build the premier pre-seed venture firm for frontier tech, and to be able to win the allocation and partnership of top decile founders as their first check, and to write a check size anywhere from $750K to $1.5 million.
But how you're meeting these top decile founders is before the world recognizes that they're top decile. So how does that work?
It's all about kind of coming to conviction yourself. And,
right.
you know, a lot of the time, I think there's a discussion in venture about being non-contrarian or contrarian, and that turn of phrase may be overused. But for me, it's all about the raw attributes of someone that I meet. How intellectually curious are they? How much horsepower do I feel like they have in terms of a work ethic? What's the mission and the vision behind the company? Oftentimes, the most important question for me is just why. Why are you willing? You know, starting a company is such an audacious, ridiculous, courageous thing to do that I think we have in pop culture become a little numb to, and especially us in venture, we're just surrounded by entrepreneurial talent.
Yeah,
it's just an insane act of courage and faith to even begin that journey. So, why would you get paid less than the well-paying job you're likely at? Why would you introduce a bunch of risk and chaos into your personal and professional life? Why would you increase the risk profile? Why would you choose to build this company right now? It's really helpful for me to just fully unpack that person and understand the psyche of them and why they even want to go on the mission before we even talk about the specifics of what the mission is, what the market is, what the technology is that they want to develop. And so for me, probably one of the things in retrospect that we have had a good hit rate on is finding top decile entrepreneurs before the market recognizes or there's consensus around these individuals having the capability and potential to be top decile founders.
The counterpoint to this would be that, yes, like I 100% agree, like it's an act of courage, and we probably, because we're in the ecosystem, we're in a bubble, we're surrounded by content like this, and, you know, we think everybody wakes up, you know, and starts a company where like it's very normal. But the risk profile is like very contextual and depends on like the type of founder. If like the founder is coming from Anduril, Tesla, SpaceX, or one of these companies and has spent considerable time there, like maybe upwards of 4 years, their net worth is usually upwards of $500,000, right? Minimum. And so they don't have the same risk profile as like maybe another founder might. Are these the only founders that can take like the sort of risks associated with frontier tech, or are these the only crop of like trained individuals who work on frontier tech? Or I mean, like my thought process here is that, you know, the entire aeronautical engineering discipline wouldn't have existed if the Wright brothers needed the degree.
Yeah,
right?
Exactly.
So
well, you're speaking to a college dropout too, right? You know, I don't believe in credentialism in the
right.
sense of needing the academic or, you know, and to be clear, while we have invested in probably 7 or 8 SpaceX, Anduril, Tesla-esque spinouts, that's not the
anyway,
the
we
core
can go
focus.
deeper into like what they bring to the table and versus like what would you look for if people are not coming for it? Like if you could,
what's most important to me at the end of the day is a super unique insight and a right to win.
Right.
and a technical strategy and plan to deliver at speed faster than others can deliver against that insight. And so, and this actually gets to a really important topic that I've been reflecting on recently about in this industry, we kind of banter around and throw hard tech, deep tech, frontier tech out, and kind of what is the Venn diagram and difference. And the reason we specifically call out frontier tech and not deep tech is because in my mind, deep tech is taking scientific or physics or technology risk that oftentimes is still in part of an R&D curve.
Interesting.
And we are specifically looking at taking engineering, execution, and commercial risk with something that is not a science level innovation.
Right.
It doesn't mean that it didn't start there at some point, but it is now past the research grade phase and it's ready for immediate commercialization.
Right.
And so that's an important criteria as well, is we're investing in these long lead time categories. Venture as itself is a 10 to 15 year hold, let alone when you're investing in quantum or defense or space. You need to find a path to commercialization immediately. And so our best founders have been ones that have internalized and understood that from day zero, have a unique insight, and also were able to commercialize the company very quickly, despite the product cycles maybe being longer than traditional SaaS, but not as long as a 5 to 6 year R&D cycle.
How do you evaluate that when you've met the founder, when you first check into like Castalian or one of these companies? Like, how do you make sense of whether, this founder will be able to execute on this? You have no data points on like their execution speed.
I love it. I love it because I only live in a world of risk. And so I feel like I'm extremely comfortable with being risk on and not having all the data points. At pre-seed, you have very little data. Yeah. And so through your diligence process and through the relationship, you're building the data points along the way that help build conviction. The other thing that helps, though, is you approach all of these conversations with a prepared mind. And so I think part of the approach that we take at SpaceVC is we're extremely diligent in thinking about these technologies that are emerging. We speak to industry participants and customers before we even meet companies, simply to better understand the problem sets and the future insights that a founder might arrive at our doorstep with, so that we can be a better partner on day zero. And so it does not mean we're an expert in every technology area. Oftentimes we're learning, at quick speed in conjunction with meeting a great founder.
Right.
But each journey and conversation we've had over the past 5 years, which is now compounded to thousands, has enabled us to be even more prepared the next time we meet a great founder. Right. That way, to your point, when you're trying to diligence and understand the technical feasibility here, we can dive in an extra layer deeper to understand what are the key technology risks that we're signing up for.
Right. We had, you mentioned, Colin as well, Colin Greenspan at Naria VC. I asked him about his thesis development process because he credited a lot of like the Mithril journey to, encouraging younger talent to develop thesis, and the same like thing they do at Naria. It's very thesis driven, which means I think, which is similar to what you're describing now, which is like you go into the market, you have a prepared mind, you talk to customers, you talk to people who have the problem, and you really try to get to the bottom of like, okay, like what is an area that has the biggest opportunity right now. And I think he was like, just riffing on the spot, and he was like, in energy, I like probably wouldn't invest, but if I were to invest, I like fission is probably an area where everybody's trying to do the same thing, which is, miniaturize this reactor technology from like 60s and 70s, and maybe there's a lot of room to innovate on the technology there, and something happens. Is this the sort of process you're going through, where you're talking to customers and you're talking to people who have the problem, or the current builders in the space, and seeing like what insight they had and like what's still not happening out there?
It's definitely similar in the sense of we crave as much market data as possible, and we spend a lot of time internally just thinking about the future of these industries and technologies, independent. And part of that is just because we can't help ourselves. Like that's just how I operate. And so independent of meeting a founder, I'm constantly researching, reading up on something, and trying to understand and predict the second and third order magnitude effects on kind of these different development paths. Right. That being said, something that I've intimately learned from my own founder journey and from the founders that we've been lucky to partner with, it comes down to the founder and the people.
Right.
And so if I were to reflect back on some of the mistakes that we have made in terms of companies that we've passed on that have ended up doing quite well, oftentimes at pre-seed, the idea and the product is so opaque that it naturally it's going to pivot and shift.
Right.
Half the time when we're investing in companies, they change their names, and so we're just investing so early that the mistakes sometimes come from VCs being so thesis driven that they forget that this is a people business and a founder driven business. And so I certainly will readily admit that on our anti portfolio.
Who's in your anti portfolio?
I think great companies that we have a relationship with that are exceptional, would be companies like a K2 Space, an Apex, Base Power. Not to say that these were all companies.
You saw them all at pre-seed.
Not to say that we saw them all at pre-seed, but we saw them all very early or have a relationship with those teams. And so, but I think, not to pick out on any single individual company, sometimes the thesis that we held is correct, but the founder and the company has adapted and they're exceptional. And so they've been able to out-innovate. And so by the time you see them, you're just tracking them casually at Series A, you're like, oh, now that makes sense.
Yeah.
But you should have
because their insights also developed and changed along the
100%.
way.
Yeah. The idea that this is static is far from truth.
Yeah, fair.
Obviously, this is insanely dynamic.
Which makes it even harder.
And so all of that to say, we try to be really thesis driven so that we have a structure of how we think about these markets, but not overly dogmatic about sticking to that thesis and adapting to the founder who's sitting across from us. Ultimately, I want to be in the business of supporting exceptional people, especially with how much we lean in. We work day in and day out with these entrepreneurs.
But even then, it's like you're always going to miss out. Like in venture, you're always going to miss out on companies, and there's no way you're going to get all of them, either because who you are as a firm or who you are as people. It's just identifying different parts of different people, and you sort of get comfortable with that, right? So what is it about these people that you're like trying to identify? I'm guessing you spend a lot of time with that people just generally.
That's my approach. Yeah. I'm much more of the venture approach where I'd prefer to build a relationship over many months as you're thinking about starting a company, and we can get in the weeds and work together and do customer research and make introductions and flush out the idea and help recruit the founding team. I love that setup. Yeah. If I'm meeting someone for the first time and I have to make a decision by next Friday on whether to invest or not, the bar is just exceptionally high in order to get to conviction there. Yeah. And I also feel like just as a person, I have fewer data points and able to make the optimal decision. Yeah. So not to say that we wouldn't do that, but we've been more hesitant in those situations. Yeah. So when you're working with someone over a period of time, just like you're working with a coworker or another founder that you've invested in, you pick up on all these signals. Yeah. And I think for me, one of the most important signals is what is the speed of execution? What is the rate of iteration and learning? And how intellectually curious are they and coachable are they to feedback, whether that feedback is from a venture firm or from customers. Yeah. And so the rate at which you can see kind of the slope of growth for these founders is really important. And that actually emerges pretty quickly, in my opinion. It doesn't mean that translates to business success or fundraising success or customer development success. What do you mean? But you can see the innate qualities of that early on in founders.
What do you mean by coachability?
Being an entrepreneur is a quest of having conviction on the way that something should be or a product and going out into market and trying to convince the world that you've made a solution to meet someone's problems. And sometimes you're wrong, or sometimes there needs to be tweaks, or sometimes you have the right product, but you're describing in a way where it's not intuitive to founders or to customers rather. And so being coachable is incredibly important. Yes, you want to be stubborn to a degree in terms of the level and depth of your conviction. You don't want to constantly be changing your position or company strategy based on every feedback. Yeah. And I oftentimes think that feedback from VCs is not helpful to founders. So there certainly is an element of don't take feedback just for the sake of it. But I think just like anything in life, the best entrepreneurs are coachable, are open to new ideas. They have strong ideas loosely held, and they're willing to adjust, especially in this market, given the rate of change. I think that's probably one of the biggest dynamics today compared to when I started my company, is the pace and the cycles of innovation and how quickly the dynamics on the field change. You have to be coachable as a founder, in my opinion, today.
By the dynamics changing on the field, do you mean the market or like how your idea is being perceived, how like investors are looking at the idea? Is it that
all of the above and policy? Right, how quickly how quickly policy is being written by this government and administration, the changing geopolitical and world order, conflicts ending and emerging in very condensed cycles. Right. Everything is just more compressed. Right. And so as a founder, there's extreme value in staying focused on your long-term mission amongst all of that noise, but it's also very helpful and important to not have your blinders on and to be taking in that feedback, most importantly from customers. Again, this is a customer-centric business, and so it's not about just because a VC during your fundraise tells you you should position the company this way that you should pivot. It's much more about what are you consistently hearing from your core customers, and how do you augment your strategy based on that?
No,
it's always a series of fine-tuning in my mind, as opposed to dramatic pivots.
That makes sense. Have you seen, like, in maybe in your own founder journey as well, the next pivot is not always in the biggest market?
Say more about that.
Let's say you are you realize that, what's an example I can share here without giving details? I'm like thinking out loud.
Well, I'll give you an example of pivots, not pivots, but opportunistic expansions that happen right now in this market. Every space and defense company that has an angle towards Golden Dome is leaning into Golden Dome. Every space company that was just focused on commercial applications is launching significant efforts to be a part of the Golden Dome program, just given the size and scale of those budgets and opportunity. And so, again, pivot is too strong of a word, but there are market forces and dynamics, whether it's based on policy, whether it's based on government decisions, based on competitors and what they're building or what they're choosing to go after. You have to react to that as a company. And so the most disciplined and best companies try to balance sticking to their product roadmap and vision, but at the same time, adapting and shifting to a landscape where it's almost too big to not ignore and to not go after it.
Recognizing when it's too big to not ignore, but earlier than everyone else.
Yeah, exactly. I mean, we've seen a number of Golden Dome-oriented companies raising capital now, pre-seed and seed stage. And part of the reason we've not invested in any of them is because now it's obvious. Now everyone in the ecosystem is pointed at it, all the way from the Andurils and the Primes of the world, all the way through your emerging leaders in defense and space tech. So it's just too crowded. And so part of the edge at pre-seed in our world, and a growth stage investor at one of the top firms in the Valley that we both know made this comment to me last week, is they love spending time with pre-seed because we help explain to them what's around the corner. At growth stage now, they're focused on a lot of the things that we were investing in and trying to figure out 3 to 4 years ago as those companies mature. And so being a pre-seed investor by nature is also a question of being on the edge and frontier of investing in terms of what's possible and maybe what the next cohort of companies might look like.
But also not on like a 15-year scale. You still have to look at like can we be 3 years ahead of market or 4 years ahead of market?
But this is where the style of venture has also expanded so much, where some venture firms, whether you're a CVC, like a corporate venture firm, or a venture firm that's attached to generational capital from a family office standpoint, that's okay with a 20-year hold time, or sovereign capital, has emerged, and it has changed the flavor and the expectation around hold periods. But for a classical venture firm like ours, even though we're investing in frontier tech and hardware-oriented categories, it still is really important for us to underwrite towards a standard 10-year hold.
So in this case, you pointed out the Golden Dome thesis, right? When would have been the ideal time to spot those companies? Was it when the concept of Golden Dome came up in like a political campaign? Like, is that when you like hedge your bets and you're like, okay?
No, I mean, truthfully, it was probably 4 years ago. Before Golden Dome was even discussed as a policy consideration. Golden Dome also, if you unpack it, is a series of programs that many of them currently exist just under different conventional names and different programs. And so part of this is a branding exercise. But using that as an example, and maybe one of our companies, True Anomaly, the insight True Anomaly had was that Evan Rogers, CEO and co-founders, were in the Space Force, and their jobs were to help defend American infrastructure and spacecraft in space from geopolitical adversaries, namely Russia and China. And they were so frustrated with trying to find a commercial solution or a private industry solution that didn't exist that they left and started the company themselves. And so that broader theme of on-orbit security, on-orbit defense, these are areas where, for those that understood the problem set, have been known for upwards of a decade. But it took someone with courage and tenacity to leave and start the company, and that journey began only 3.5 years ago to where they are today, that it positions companies like that very well for emerging problem sets and policy opportunities as they emerge from this administration and future ones.
Interesting. Got it. That makes sense. So it's having an insight about like something that, irrespective of like a political cycle, is going to be needed, and it either accelerates because of like whatever's going on in the macro, or like it's slower, but so you're between 4 to 7 year timeline on something, right?
And I think one mistake venture makes, and maybe some folks are making in this moment, is they over adjust to the current political climate or administrative set of policies.
Right.
It's not to say that you should ignore that, but I just think very pragmatically and long term.
Right.
We are 1 year into this administration, roughly. There will be 3 more years and then an election.
Yeah.
And so the question, whether the policies of this administration continue into the next one or whether they change, you need to have a strategy as an entrepreneur to be successful regardless of what the policy decisions are. And we're seeing this very clearly right now in energy, and kind of formally referred to as climate tech, right? Where lots of companies that were building interesting technical solutions in energy generation, storage, transmission, decarbonization technologies were relying more on government subsidies and tax policy than they were on the underlying unit economics. And because of that, once the ground shifted from a policy standpoint, they found themselves stranded. Whereas the types of companies that we're looking to invest in are able to close the unit economic loop themselves, are able to be profitable and have it make sense from a P&L standpoint for companies to adapt, especially data center developers at this point. And if policies change, that just accelerates them. Right. It's not a fundamental reliance on them for being successful as a business.
That makes sense. What's an other insight that you, looking back, discovered 4 years, 5 years in advance? And what was the process of like finding that insight? Let's go through I'm like particularly interested in processes.
It's an exceptional question. We were joking about this earlier. I made a comment that I love seeing the answers to the test, in the sense of, we invest at things that are so nascent. Oftentimes we're investing before even the co-founders are on board, or the company name changes, the idea changes. So part of the most satisfying element of this job for me is seeing how these companies succeed or fail over times, and how these markets develop and what they end up becoming 4 or 5 years later, if not further. And so what insights have we gotten correct? I don't know that I have the conviction, just given the dynamic nature of these markets, to say definitively that we've gotten anything completely right or wrong.
Interesting.
There are shades of gray there.
Yeah.
And I think there are, we were investing in space tech and defense tech before American dynamism was coined.
Yeah.
Before this notion of reindustrialization occurred, before Ukraine-Russia conflict kicked off, before this latest iteration of Israel-Gaza and Hamas kicked off. So I think there was a little bit of good timing on our part, but also an insight that there was a lot of exceptional talent there that was being underfunded and was an opportunity. Similarly today, we're investing at the intersection point of a lot of these interesting areas. And so what are insights for the future? We've invested in a small modular desalination company. I think access to clean water in both a defense, commercial, and development standpoint is incredibly important. Underpins a lot. And there haven't been any big water tech venture scale outcomes in recent memory. And I actually, that gets me more excited for those types of companies and journeys, right? It's not an also and, it's a unique N of one company that can define a category. We have not announced this investment yet, but we made an investment in the quantum communication space. And so, finding these areas at the edge where it's not part of the lexicon today of, SF or the venture ecosystem, which is now overly focused on defense tech or overly focused on nuclear as examples. It's not to say that we're not bullish. It's just the edge has shifted. So too has how we think about the world.
No, that's fair. Like, I guess Q1 last year was when defense was at its like peak, and that's when that was your signal to run away as far as possible. And then
it's still very hot today, and
it's still very hot today. You're right.
But I think to your point, what you're seeing is there are stages to capital formation, and these waves still take time. So we have not made a hardware only defense investment in almost 2 years.
Wow.
That does not mean that we haven't looked at defense tech,
of course,
intimately in the past 2 years. It also doesn't mean that our companies aren't selling to the DoD or to the broader defense tech ecosystem. It's just more dual use in nature.
Right.
I just find that the bar in some of these ecosystems is exceptionally high. And I think LPs are recognizing that too. A lot of institutional LPs that I speak to want emerging manager exposure for the reasons we spoke about earlier, want concentrated portfolios as opposed to 50 or 60 or 70 companies in a portfolio, but recognize that only being focused on one of these frontier tech sectors puts you at risk of these larger macro shifts. And if the ground shifts under you under a 10-year fund cycle, that might be more risk appetite that they're willing to take.
Right.
So that's why I think a space only or a defense only or even a quantum only pre-seed firm can perform exceptionally well. Not to say that it can't, but over 3 or 4 vintages over a 25-year period, that's the open question that I think LPs are debating. And I'm not definitively saying one way or another it is or it isn't, but I think that can be the challenge sometimes.
Yet we do have specific bio funds.
Yes.
How does the dynamic change there?
What's interesting though, I don't spend a ton of time in the bio market, so I'll be speaking a little outside about my area of expertise, but everyone who does spend time there tells me that the market has absolutely crashed and is non-existent today in terms of deal activity and dollars flowing. So to be honest, if anything, biotech, I wish I was doing more biotech because it seems like a phenomenal time period to be investing in biotech before everyone jumps on the train of personalized AI-enabled genomics and health and wellness trends and leveraging AI to understand kind of the next pharmaceutical unlock. So who knows? Maybe biotech is where you should be.
Bio is needed in space, so it kind of falls in the thesis. And somehow
these categories though require such finite expertise that I think that's really the more serious answer. Is that biotech just has its own regulatory pathway. It has its own unique talent network. It has its own unique bespoke customers. That there's a great deal of repeatability and a moat built around doing that exclusively, as opposed to our companies. Some of our founders are former SpaceXers that have started energy companies or desalination companies or quantum companies or defense companies. And there's actually a lot of shared insight and overlap between those ecosystems, maybe more so than a SaaS founder starting a biotech company.
If you get an acquisition offer from a mega fund, what would you do?
For our firm?
Yeah.
Oh, that wouldn't be a conversation.
No.
We're having way too much fun. And I think the honest answer is that venture today, I think people like, Harry Stebbings from 20VC and others have kind of made the comment that venture is more of a commodity business. It's a low margin, commoditized business. It's never been more competitive than ever before. And I think largely there are elements of that are true. And so for me, you have to have this enduring passion and interest in building and helping other entrepreneurs get started on their journey that goes beyond kind of the financialization of the industry. So for me, this is my life's mission. What that structurally looks like always can evolve over time. But I would not be a very good employee of someone else. I've only had 2 jobs in my life. I dropped out of college and I started a venture-backed tech company. And then I started this venture firm. And so that probably means I'm like very unemployable to, going and working at a larger fund.
That's a fair point. Because you do see that happening these days. You see you have these smaller VC firms, get absorbed into like the mega funds that are like billions in AUM.
Look, the reality is, I think there's the joke and the trope that being a VC is like a very cushy lifestyle, especially compared to the founder's life. And to be very clear and unequivocal, being a founder is harder than being a VC. There's no doubt about it. I've been in both seats, and being a founder is more difficult.
Probably way harder.
That being said, there are many different flavors of being a VC. And I have a lot of admiration and respect for any solo GP, any emerging manager that's building their own firm or is on that journey. That's why I spend so much time in that cohort with other great fund managers, because it's a very solitary journey, and it takes a lot of effort and dedication before you can begin to build that track record.
It's a very entrepreneurial journey.
It's a very entrepreneurial
resource
journey.
Constrained. You're also fundraising.
100%. So there's a lot of love I have for anyone that's willing to go on that journey. And so I think the reason why you see people exit that lane and would consider an acquisition offer though, and why that type of, arrangement makes sense, is just the resources. At that point, it allows you to maybe pull back a little bit.
Ambition, resources, a combination of some of those things.
Probably signals a different phase for that venture firm.
Stage of life. You mentioned that you don't have the bio or healthcare have different talent networks, and you need different level of knowledge, etc. And isn't there expertise, but you didn't come from a frontier like space or defense background either, right? And you started investing in these sectors. So how did you go about building those networks 5 years ago?
Hands-on, rolling up my sleeves experience. I had
Right.
friends that were employees at SpaceX. I started spending a lot of time around the LA and Austin and Denver ecosystems,
Right.
understanding what the challenges were for these companies early on.
Right.
And I think one of the most important early parts of our success so far has been when we invest in a company, we're not passive capital, we're extremely actively involved.
Right.
And part of that has allowed us to compound and be part of 20 founding journeys. So when I make my next investment, in the next few months, it's not only with my founder experience baggage that I bring. Probably even more relevant is the 20 other companies that we've been part of the founding journey with in the past 5 years. It's the hundreds or thousands of companies that pitch us every year that we have spent time understanding their ecosystems and talent cycles. So I think that's part of the benefit of also being a very hands-on concentrated investor is when you're managing a portfolio of 50 to 60, again, there's nothing wrong with it, but I find the depth that you can go with each company just structurally is not there.
Right.
And so the insights or the lessons, the information asymmetry you can get from each of these individual portfolio companies is just different. And so that's been a key part of our strategy. It's a key part of what I think is performant for early stage funds. And it's also just how I'm wired. I prefer to go much deeper on a small number of problem sets as opposed to managing a portfolio of 100 and trying to intimately understand and change the inflection point for each of those businesses.
Right. No, that makes a lot of sense. And there's like also, if you have like 50 companies in the portfolio, you probably might not be able to do justice to help each of them. I mean, you'll eventually end up having that, but
the type of help is just different. It doesn't scale, or you need to develop platform teams or talent teams, and that just changes the dynamic again.
Exactly.
Where you're not working with the GP that invested in you exclusively. You might be working with other folks at the firm, which again is not necessarily a bad thing.
Right.
It just changes the dynamic. When a founder accepts a check from our firm, they know that they're going to be exclusively working with me. They'll have my full attention. They'll have my full network. There's no politics of needing to get to a decision maker internally at the firm.
Right.
We move quickly and with conviction. And when we invest in you, we are fully supportive of making you as successful as possible. And so I find that like that deep alignment from day zero can be very additive and accretive to a founder.
Going back to, where you meet these founders and discover this talent, we spoke about the Anduril Palantir network is like pretty entrepreneurial. I think that they've produced some great talent, Tesla, SpaceX, etc. Outside of these like known what's the case for getting founders or backing founders who are coming from like these trained environments versus finding talent elsewhere?
For me, it's a lot less about where they come from and more what set of experiences do they have exposure to, and most importantly, what culture have they grown up professionally from a developmental standpoint in it. I think that's part of the reason we gravitate towards SpaceX and Tesla-esque cultures is just the pace of innovation and the speed and kind of the no BS mentality that a lot of these founders come with, and the deep insight they have around friction points and problems in the industry. That really resonates with us, as opposed to we've had less of a track record of investing in academics that develop technology and spin out of labs.
Right.
That has been probably less of a fit historically for our venture firm. And part of that has been maybe the exposure or lack thereof to the commercial market and to getting customer feedback and to understanding the pain points. We very much resonate with founders who have experienced a series of problems and are thinking creatively about how to solve it, not necessarily founders who have developed a novel technology and are now trying to figure out how to apply it to the world. And so, again, because of that, I think that naturally pulls us in the direction of certain talent pools.
You mentioned you also help some of these founders meet their co-founders, whether you end up investing in them or not. You help them recruit their founding teams. What is the DNA of a good co-founding team?
It's like a good marriage. It's complementary. I don't ascribe to the belief that one needs to be business, one needs to be engineering oriented. They can both be engineers. More rare and likely probably not if they're both commercial. Obviously, especially in a hardware oriented sense. But for me, it's about communication. It's about trust. It's about both being coachable in the feedback loop between them.
Right.
It's about seeing friction and understanding how they've been able to work through that. Some of our founders that we've invested in, we were part of their journey pre-incorporation, and we saw debates and discussions about product direction and what you should do with early customer feedback and research, and that's invaluable to understanding before you even invest in a team. So again, every founder journey is different in terms of what we invest in, but for me, especially having been part of a co-founding group of people to pursue an entrepreneurial journey, I know how important these relationships are. And the way I often joke about with founders is you need to be able to go into one room and argue incessantly at the top of your lungs about a particular strategic point, and then walk out and go into another meeting together, separating that out and supporting each other as if nothing had ever happened. So you need not only thick skin and a level of transparency, but you also need to have a short memory and to be able to keep kind of the company's priorities front and center.
Yeah, that's actually a very, very accurate way of describing it. You need I haven't heard anyone describe it like this. You need a very short-term memory where you walk out of the room that's behind you and you move on and you're on to the next problem set.
Yeah, building companies is a contact sport, and no one has had if you really dig into all of the successful companies that we look at and respect today, all of their founding journeys and company building journeys were fraught with disagreement, with debate, with vigorous disagreement at times. That's just a natural tension point for building these companies. So we embrace that, but we want to make sure that the founders understand what a healthy dynamic there looks like.
Did you get that from iced hockey?
Maybe, perhaps, getting hit too many times with a puck to the head. I think team sports definitely brings that out in you. I did debate in high school as well and mock trial, and so I think the more growing up that you can put yourself in an environment where that encourages debate, discussion, the clashing of ideas. I also think, if I'm really intellectually honest, one of the things when you're a 17-year-old founder starting a venture-backed company is you have no track record or experience to lean on, so you have to learn by trial and error. And so the error part of that is an inherent feature of the journey for an early first-time founder. So I think I've just embraced making mistakes and learning from them.
Okay, and now is probably like a great segue into the founding journey. Tell us about the company you started when you dropped out of college at 18. What conversation did you have with your parents? What was the company about? What was the insight? Tell us about that journey.
Yeah, look, I come from a small town in Ohio. Both my parents are teachers and kind of in education. And so I was not exposed to entrepreneurship or venture until I was a senior in high school. A firm called Drive Capital came to Ohio and planted their flag in the Midwest. And a couple Sequoia guys. Yeah. And so senior year, I kind of began to understand what entrepreneurship and venture was and was immediately hooked. I think just the ability to be creative, the 24/7 competition. I mentioned I grew up playing ice hockey, and that's constrained to 60 minutes at a time in terms of on ice. Entrepreneurship and venture is 24/7, 365, and so that level of competition and creativity was enthralling for me. So I went to school. I went to Boston College. I met a couple of other classmates who were tinkering around with some ideas, and we kind of settled on this concept. This was in the early 2010s, so to bring you in a way back time machine. This was the era before we even were thinking about mobile and the iPhone as like the predominant means of engaging with digital content or with companies. We were in this desktop tweener era where we were beginning to jump to mobile. We were beginning to think about content personalization. It was very rudimentary. And so college students and college campuses are often the tip of the sphere for how consumers will interact with technology in the future. You saw this in social apps. You saw this with commerce, with the gig economy. And so at the time for us, it was an observation that online advertising sucked and that it was really annoying and that we hated it.
Yeah.
And I'll skip kind of the long journey, but we kind of over time pivoted to this data infrastructure enterprise software platform that large corporate 500 and governments were using to better collect and manage and organize consumer data to help drive deep personalization across the lifecycle journey. But what that allowed me to do by building that company was not only to understand how SaaS journeys work and what it takes to build a company of 100 plus people and kind of managing all the different challenges that come with that, but it also allowed me to understand each of our customers' businesses very intimately. Because by nature, our product was deep personalization along a customer journey. And so it allowed me to jump into a lot of different industries at a very young age and start to have a pattern recognition across that. So I never view myself as just a software person just because I happened to do software as kind of the first entrepreneurial act.
Yeah.
The high school I went to was very STEM focused. A lot of my friends were in robotics and in engineering. And so, as you know, I was in Boston building this company, and our first office was in Cambridge next to Harvard and MIT, just incredible robotics and deep tech talent. So I always felt like I was surrounded by entrepreneurial talent building in many different ecosystems. And so it became pretty clear to me, probably about 6 years into that journey, that as soon as it was done, I was going to go through my own pivot, perhaps, but my own transition into some of the categories that I spend time in now from an intellectual curiosity standpoint, let alone a venture standpoint.
Yeah. Actually, give me the long version. What was like? You mentioned you yourself went through a few pivots. What was the first insight, and like, how did you meet your co-founders? Like, how did you decide? These are the people you're going to start a company with, or
as an incoming freshman at Boston College, there's a program called the Shaw Leadership Program you can apply to. So if the freshman class is 2,000 people, 20 freshmen get selected for this leadership program. It's a co-ed house that you live in on freshman campus and kind of go through this set of extracurriculars. I was applying to that, and the person who was interviewing me became my eventual co-founder. And so we ended up both being in this program together. He's 2 years my senior, along with other co-founders we had on the journey. We had an incredible founding team. To be clear, our company was not a singular insight or a singular effort by one person. We had a team of probably 30 students working on this as a part of a student competition on campus before 3 of us ended up dropping out. And so, a lot of love. But I think the early days of building a company in college, you build towards what you know. And so, the early versions of the product were very consumer focused, helping consumers better select in and out of personalized kind of data collection or advertisement. And then
because that is what you were experiencing.
That's what we were experiencing, right? Yeah. And then you realize the shortcomings, and you realize, wow, walking up and down Commonwealth Avenue in Boston, Massachusetts, selling to local businesses is really, really hard. And they're spending $500, and our hit rate is 0.5%.
Yeah,
we should probably innovate and maybe sell to bigger companies. Well, if you need bigger companies, you need bigger scale. Well, and so we kind of developed this like Facebook model in the sense of we would go campus to campus and kind of expand that way at first.
Wait, you started developing these campus programs?
Yeah, we developed these campus programs. And so, we kind of like very thematically would roll out campus to campus, recruit a bunch of students onto kind of our network and ecosystem. And they were part of...
What was the campus program about? Because I myself started these campus programs. So I'm like...
Yeah, well, I mean, as you know, it's like, it's very non-scalable. I mean, it's very guerrilla tactics. Again, this is before most people had iPhones. So, a lot of what we were doing was even like offline.
This is field marketing, which is not even probably a discipline anymore.
One of the benefits of being in Boston, though, is there are 50 college campuses around the Boston area. So, we were very lucky to be able to spend time at MIT and Harvard and BU and Tufts and other universities around. So, look, it was very non-glamorous guerrilla marketing, just trying to get students to sign up for the program so that we could then...
Posters in dorm rooms and hallways everywhere.
100%. Yeah. Our first launch, it sounds funny saying this now, but I think coming from such a non-glamorous company building journey and the creativity that was required actually helps me now as a VC in some of these very competitive deep tech hardware ecosystems. Not to say that we've ever recommended some type of campus style guerrilla marketing playbook to any of our companies. To be clear, we haven't. But I think it's just the creativity of how you problem solve through that has been very interesting. So we went from a journey of being very consumer student focused to broader consumer focused to recognizing we didn't want to be responsible for the network and that we should just sell a technology platform to larger brands for them to engage with their own customer sets. So we dropped the network side of it to then kind of understanding what the actual enterprise software requirements were and where, the sales forces and kind of the personalized marketing clouds of the world were going at that time in the enterprise space. And so that's really where we found our stride. And, so the highlight of the company is that billions, maybe it's even, the company still exists and it was bought and operating separately now. So, maybe it's tens of billions at this point, but at the time we sold billions of questions and consumer interactions had happened with customers like the NFL, with eBay, with the NHL, the NBA, Procter & Gamble. We were serving a lot of the preeminent brands with some government organizations as well. So The scale of the impact we had was quite large.
What was the product?
At the end of the day, the product was quite simply like a better version of SurveyMonkey or Qualtrix. Think of it as like Canva and SurveyMonkey squished together.
Yeah, that's what I was thinking. Is it like, okay, that
Yeah,
makes sense.
what's actually really intuitive and interesting
yeah.
now is like, it's almost like prompt engineering before it existed, where you would arrive at a website or you would arrive at a piece of content and you would go through a personalized series of branching questions and experiences, and it would try to quickly understand what's most important to you, so that not only that experience, but every other touch point you had with that brand was hyper personalized to you as an individual consumer and what was important to you. And at the time, a lot of the underlying data infrastructure for these corporate companies was based on inferred data. What you clicked on, what you purchased last. It was very informal in terms of how they were making multi-billion-dollar marketing decisions. And so we were helping influence that. And it was a fun journey. I learned a lot, but I definitely also learned, no offense to my B2B colleagues, I definitely did not want to spend my career in B2B SaaS, and I wanted to exit as soon as possible. And so that's what we did.
So after that exit, you had this sort of moment where you could have started another company or started a VC firm. Well, you started a VC firm. Is like hard tech or like frontier tech company still in the pipeline?
Starting a company?
Yeah, some point.
Yeah, potentially. I mean, I probably would be more of like a Delian type situation in terms of like investing.
Do both.
And doing both. But I think it's very hard to credibly be the best at both simultaneously.
Yeah.
So you need great teammates on both sides of the equation.
Or you probably maybe can't be the CEO.
I don't think you
isn't
can be
the
CEO,
CEO, right?
I don't think you can be the CEO, and I also think it would be very hard to independently run a venture firm as a solo GP and to be part of a co-founding team.
Yeah.
So I'll never say no. It might be part of the journey. I also don't think you can say yes many times.
Yeah.
It would need to be a pretty unique situation, probably only once or twice in a career.
Right.
But I have a lot of entrepreneurial energy and passion, and I get out most of it by being deeply involved in helping support our existing portfolio companies, which is why I think our journey will always be at the pre-seed stage. I don't see a world where we migrate up and manage bigger funds focused just on growth. That's antithetical to our skill set and our approach.
So your startup journey started at Techstars, and some of the people in your cohort, one of them was, you were telling me, Nikita Bear, who's now running Product at X, has sold a couple of consumer companies, and this incredible group of like young people. How do you see accelerators now in the venture landscape? How have they evolved 15 years on? What role do they play versus what they played?
Yeah, I think like venture at large, accelerators have become very mainstream. And that's not to say in a bad way. Yeah, obviously it's become democratized where people from non-tech ecosystems and non-tech backgrounds have an on-ramp to venture-backed startups and to startups writ large. I think that's a societal net positive and a benefit. Compared to my experience, though, in 2013 with Techstars Boston, this is in an era where there were 3 Techstars campuses globally, New York, Boston, and Boulder.
Right.
The bar was exceptionally high. You were getting talent from all around the world trying to vie for one of those 10 spots in one of those locations. And I think to your point, the cohort I was in was tremendously helpful. I was 18 years old. There was so much I didn't know, and being part of a community where the founders of PillPack were building a pharmaceutical company and they sold to Amazon for $1.1 billion. Nikita's there, who obviously has tremendous consumer taste and insight in terms of how kind of the future of consumer social products was. We had a company, Synac, which is still active today and was one of the larger private cybersecurity companies. A couple of former NSA guys had started the company at the time.
Yeah.
Cash was a gentleman who was starting a company that didn't work out, but he's now the COO, CRO at Circle, who just IPO'd and is experiencing tremendous success. So, and to top it all off, the person who was leading our cohort, Katie Ray, I have tremendous respect and love for her. She started the Engine at MIT, which is now the accelerator venture firm for deep tech spinning out of MIT. And so I think the point is there was just a concentration of talent and perspectives there that was tremendously helpful in accelerating my personal startup and venture career. And I don't know if that same level of concentration exists in accelerators today.
Right.
I think it does in pockets.
But is it a function of scale? Like when you go from like groups of 10 to groups of hundreds, it's just like different, or even like 50 plus, it's different.
Yeah, it's definitely a question of scale. And,
It
and
is
founder talent has
right.
also scaled too. So it's not to
Right.
say that scale
Is that because of education that's like more widely available, accessible through, the
informal education. I'd say content.
informal,
For sure.
podcasting, YouTube,
Podcasting, YouTubing,
Right.
X or LinkedIn.
X or LinkedIn,
Yeah.
accessibility to like events.
Yes.
Right.
You used to have to go to, Sand Hill Road
Yeah.
or go to these very insider networking events.
You
in
didn't have
Boston.
tech weeks in your city.
You do not.
Yeah.
You definitely did not.
Yeah.
Every week was a tech week in certain cities if you were in the in,
Yeah.
and for the rest of the country, you were on the outside looking in.
Yeah.
So I feel very passionate that these communities should exist, to be clear. I'm from a small town in Ohio
Right.
where
Of course.
venture was not part of my upbringing.
We're just discussing the current state of like
For
how
sure,
it's
yeah.
changed,
But
right?
I think to your point, at least for our strategy, we do not recommend that founders that we invest in go to Techstars or Y Combinator or other accelerators. They're
Right.
great products. They're great communities. Exceptional companies have come from those communities.
Right.
I just think there's an opportunity for founders that are maybe in their late 20s, early 30s that have had some industry experience and are raising venture.
Yeah.
There's always benefit to being part of a community and getting the spotlight of a demo day. But is it worth 6 or 7% of your company for a
Precisely.
$100K check?
Yeah.
That's kind of where founders will have to make that trade-off decision.
Yeah. And there's like, I think that's probably the reason Thiel Fellowship stayed successful. It was groups of just selecting 20 people, and that didn't change.
Yeah.
For whatever reason.
Yeah.
It could be because it's just Peter funding them or whatever reason, right?
There's an exclusivity that people crave that I also think signals value.
Yeah.
And there is something to be said. I haven't articulated this publicly, but I reflect on it sometimes. There is a degrading of brands that is happening in education.
Yeah.
In as you have online MBA programs and extension schools and other things that have come online with all of these.
Which is the most lucrative business, by the way.
Which is why they do it.
Yeah.
But obviously it changes the perception of elitism and brand of a concentrated cohort versus access for all, which again is not necessarily a bad thing. But if everyone has Penn on their LinkedIn or resume, it just changes the dynamic. Similarly with these accelerators, when you're going from cohorts of 10 or 20 to now 600 per year, that changes it. Same with venture firms. I won't name any, but venture firms that are writing 100 checks a year that used to previously only write 4 or 5 checks a year and have, multiple strategies.
Yeah.
That just changes the brand dynamics. And so I don't know that we as a venture ecosystem have fully digested the implications of that.
Yeah.
In the sense of, perhaps raising from Sequoia is always going to be something that you're proud about and tell your parents about. But, other firms that used to be harder to get a Series A lead check from that now lots of people can get a $500K or $1 million check from. I think the dynamic of that is shifting.
Right. I think this would be a fun debate because we had Oren Hoffman on the show who's trying to do 80, 100 checks a year.
How many?
80 to 100 seed
checks?
Yeah.
There's not anything inherently wrong with
it's
that
just
as
a different
strategy.
Yeah.
It's just a different strategy. And I think at least in frontier tech, one of the areas where I see, obviously I believe in a concentrated strategy. Our fund will have 15 in the fund.
Yeah. No, they're sector agnostic. So
it's not only a concentrated strategy, it's a hyper concentrated strategy. So of course I'm biased. But part of the reason we believe in that is because when you're investing in 80 to 100 companies, inherently, just by the nature of the job, it's hard to go deep on each of those categories to be a domain expert.
Yeah.
It's hard to go deep post-investment in delivering value to those companies. You have to start thinking systems level. So you're creating communities, you're introducing talent to each other. You're doing things not individually for the companies as much, but for the broader portfolio. And also, what I would argue is the best benefit. So it all has to
compound.
It has to compound, and the best benefit of a concentrated portfolio, in my mind, is the insights and learnings you get from the existing portfolio that allow you to make the next best investment decision afterwards.
Right.
The hardest challenge, though, with the investment in a concentrated portfolio is obviously the hit rate.
Right.
It's why you feel one feels that a diversified strategy allows you to be more likely to catch a unicorn. But I would even argue in a world where, to your point, we started this conversation with concentration of deals, fewer deals, the outlier effect being even more pronounced in venture than ever before. Does a hyper-diversified portfolio still have the same return profile?
Seems a fallacy.
In a world where there are fewer deals and the deals that are an outlier effect have maybe less of a pronounced impact on your portfolio. I don't know. Really smart LPs will tell me that a diversified large portfolio is the best way to go.
Right.
And perhaps systematically in a in a theoretical world that makes sense.
Right.
And for marketers or investors that have a great marketing reputation or have a great network or deal flow like Oren and others, that may be the perfectly suitable strategy.
Right.
But I think for my style of venture, I approach it like a craft business.
Right.
And so for me, that's highly personalized, one-on-one, deep engagement and type of relationship building.
You know, I hosted Doug Leone once for an event, and he talked about how venture. I think he's talking about this publicly, which is like venture is an apprenticeship business, right? Who would you consider your mentors in the business, or how did you start learning about the business?
Yeah, I mean, I will. I'll give credit to one individual, but there's many individuals that I've been lucky to be a part of. I had some great venture investors on my own journey that as a founder that I leaned on once I become a VC. But actually, my LP number one, he will want me to call him that for sure because he deserves it, is a gentleman called CJ Ream in the Bay Area. He runs a firm called Amity Ventures, a couple $100 million AUM firm doing exceptionally well.
Yeah, they just had their fall gathering.
Yeah, last week in SF, I was at it. Were you there?
I couldn't go.
Okay, all right. Well, I have a lot of love for Amity because folks like CJ have been very helpful who are several iterations further down the journey than I am on my firm building journey. At the beginning to ask really basic questions too. Portfolio construction, audit management, LP IR relations, all the way down to more nuanced conversations around when to sell a position, how to best support a founder through certain situations. So I have a lot of LPs that are currently VCs or run VC firms, and I've been very thankful for the advice and community and relationship that I've built with many of them in terms of the best way to build a firm. Because ultimately, at the end of the day, there's no one singular way to build a venture capital firm, but I like to take insights and kind of best-in-class ideas from a variety of people.
What's your top takeaway from CJ at Amity?
Oh my gosh, there's been so many. One of the unique insights that CJ has had that has resonated with me, and we were actually speaking about this at some point, I won't exactly timestamp it for privacy purposes, is pace of deployment and being okay not deploying capital. It's one of the hardest things to do as a VC is to send a quarterly update and say we did no investments this quarter.
Yeah.
And I've done it twice now.
Because that's your entire job. You raised capital to deploy.
You raise capital to deploy.
Yeah.
And, you know, there's this perception that you're not doing your job. Maybe you didn't see the right deals that quarter.
Right.
But it's just been very helpful when I found myself in those situations to have someone else who has said and has experienced, we also did not in the peak of 2021 and we are happy we didn't, and look at the implications that has had. So,
or in the peak AI and defense cycle of 2023, you're like, I'm not deploying.
Yes. Again, I don't intentionally ever come into a quarter with that mindset.
Right, of course.
But I think we stay more disciplined to our structure and strategy. We try not to play the game on the field just for the sake of it. And so in those moments in time, it's really helpful to have VCs that are running their own firms, not at multi-stage firms, to bounce ideas off of, to understand how they've reacted in similar situations.
I think another person who told me they just did 2 deals a year. What was it, 23 or something? Mike Maples, yes. So
legend.
Yeah, he was telling. I had him on the show recently as well, and he was telling me it was one of those years, 23 or something. They just did like 2-3 deals that year, and there's no compulsion to deploy.
Yeah, I think it takes a great amount of conviction and courage for VCs to do that. And have conviction in the relationships that they have with their LPs. And I have to give credit to my LPs. They have been extremely supportive of our approach to venture. When we launched Fund 2, which was the middle of last year, our pace of deployment was slow initially, and then we had a lot of activity within 1 quarter, which was not planned, but it just happened that a few things landed, a follow-on check and a couple of net new all at the same time. So if you plot out over the course of our Fund 2, by the time it wraps up, a very high percentage will be in that 1 quarter. But at the same time, we've also had 2 quarters where we've done no new deals.
Right.
And I think as long as the principles of what we've promised to our LPs remain constant, they've been very supportive of that micro fluctuation, but still staying pace to the overall fund deployment.
Right.
I also told my LPs when we raised Fund 2, I planned for up to a 4-year deployment. So typically venture firms are a shorter deployment period.
3 years.
We're tracking against a 3-year, but I told them it's important to me to not play the game on the field and deploy just for the sake of it. And even if it's counter advantageous for me as a venture manager to take a longer period of time, I want to do what's optimally best for the LPs and for the portfolio. And so we built in a strategy where we could deploy up to over 4 years if we need to.
Fascinating. Have you also tried experimenting with the, I think, is it like Future Ventures, Steve Jurvetson? They have like I think he's tweeted about this. They have a 15-year sort of
fund life.
Yeah, fund life cycle, which I don't know if you've like thought about that.
We haven't had to, and we follow a standard 10-year fund structure. I know Steve. I like Future. They led the Series A for one of our companies, Zona Space, which is developing alternative GPS satellites. So a lot of respect for Steve's career and what he's done. At this point, though, I think it gets back to our roots of trying to find hyper-commercializable technology and frontier tech ecosystems.
Within a 10-year timeline.
Within a 10-year timeline.
Yeah.
It's very important to me. It's why we've not made any lunar investments today, as an example, or any quantum investments that we believe are on a 8-year R&D cycle to prove a certain throughput of qubits on a quantum computer. It's just not been our strategy.
That's what Colin said too. They like try to stay within the 10-year like commercialization cycle, and that's just because of the nature of the business.
At the end of the day, though, you don't want to do anything unnatural or disadvantageous to a founder. So if we're at year 9 or 10 and companies are doing great, it is not my intention, nor do I think it should be a venture firm strategy to force a sale of a position, especially if you have a meaningful percentage of the company. So I do think there's a role for continuation vehicles, but not at the expense of meaningful DPI and not as an excuse to aim for that 10-year benchmark. You should still be aiming for the 10-year fund life. Of course, naturally, I built a SaaS company and it took 9 years to exit. So I certainly understand the time it takes to build great companies.
There's another thing I think I'll refer to Colin again because he brought up another interesting point. I think the fund started with this thesis on critical technologies and there are ecosystems outside Silicon Valley that you can invest in, but as you referred to earlier, strong views loosely held. So but they were open to like basically any transformative technologies, great founding teams, and within the reindustrialization category, they invested in. You mentioned this on the pod. One company, that's it. And his co-founder is like the co-founder of the entire reindustrialized
Austin
movement.
Bishop and
So. That's really interesting how they had so much conviction in the category, but like from a fund deployment perspective, only one company in the advanced manufacturing space made sense. I think sometimes that discipline is insane.
It's remarkably disciplined, and I commend them. It also probably might signal that they understood the transition that was happening, but that we're also still in the very early innings of that transition happening. So it's not to say that in 2 years they find a number of companies and have a lot of activity singularly. I think, though, it just also speaks to the bar and how high it is in some of these categories. You really have to find a special founder, team, and technology approach to consider underwriting.
Are there, from your early days, you mentioned in venture, from your founding days, do you have mentors that you still look back on, and what did you learn from them?
Yeah, and many of them are LPs now, which I'm grateful for. I'm the consummate lifelong learner. I'm always trying to learn from other people's experiences. A lot of it at this point, though, is just pulling a few golden nuggets from each individual founding journey. What you realize when you start your own company and go on a journey is that is such a unique, singular experience to you that even though there are similarities amongst other founding journeys, everyone has had a very different set of experiences. And so even just as two successful founders sharing what worked, what strategies, what challenges did you experience at that stage, other friction points in the business. So yeah, certainly I've leaned on our existing founders who are building successful companies to understand the challenges they face today so that we can share that with the next great cohort of founders. But also founders. And I think one misnomer that's maybe interesting to pull on is I actually think it is hyper relevant to learn from the founding experiences agnostic of sector. There are nuances. There are obviously very important nuances, and it is exceptionally helpful if you're building a energy generation company today in this market selling to data centers, it's very helpful to talk to a founder building in the same sphere 2 stages ahead of you, right? That's very helpful. But I also think so much of a founding journey can be translatable across industries and experiences.
There's strategies,
Totally. That the founder of Lovable sitting down with the founder of Castalian, sitting down with the founder of Caruso Energy could have a robust conversation that, again, the flavor and the customer terminology and the rhythm of those businesses would be very different. But I'm sure there would be similar challenges of dealing with board members or fundraising or
culture building,
culture building or dealing with the policy environment they're in. So I think there's a lot of shared learning. And so I always love chatting with entrepreneurs regardless of what their kind of personal journey was.
How have the talent networks compounded, like, for you as like you've gone deeper and deeper in like certain categories that you invest in? And is there going to be a talent portal that you're going to open? What are some opportunities like that you see as like your networks, customer and talent networks go deeper?
Yeah, the talent portal is my LinkedIn inbox or my email inbox or Twitter DMs. People reach out all the time, and I'm grateful for that. Truthfully, I think the talent networks have changed a little bit in terms of what they're building, and also the next generation of companies that are being built now in these sectors. So, we've kind of certainly made the point that SpaceX and Tesla and Anduril and Palantir have great talent networks, not exclusive to those by any means. But the next generation of companies, whether it's in our portfolio or other companies building right now, the Crusoe Energies of the world, the Redwood Materials of the world, the IonQs or Psi Quantums of the world, there's great entrepreneurial talent everywhere. So I'm a big believer in being a force for good and helping people think through some of their ideas. And because of that, we've been lucky to receive a lot of inbound from people that are going through those early stages. But I think it's equally important to not become so overly focused on the talent pools of the current. They are not thinking about the talent pools of the future. So there are always emerging talent pools, and that might not always be at the splashy brand in the Bay Area or in LA. It's one of the reasons I'm so bullish on Austin, truthfully.
For the talent networks.
Yeah, I think Austin has an opportunity, especially as companies in frontier tech like Saronic and like Base Power and Apptronic and others scale. They'll go on a really interesting founding journey that ranks among the best of the best anywhere in the country. And so those director level, those VP level individuals that are part of those journeys today.
They're eventually going to start.
Yeah, there's going to be a mafia that will spin out, and hopefully many of them start companies here in Austin, Texas.
And
so
you would already have hosted them for barbecue for like number of years.
Yeah, so, barbecue, tacos, walks around Lady Bird Lake. It's
so
part of the lifestyle here.
That's the moat.
That's the moat.
Stay in Austin.
Is barbecue.
Have barbecue, go have tacos, and enjoy the Barton Springs.
Yes.
I was really curious. What's the tweeting strategy for a VC?
Oh, it's interesting. Truthfully, I don't feel like I'm good at this. If I'm being really honest,
you'll have a lot more to give to someone like me who's still like starting out or like.
Yeah, I think you have to be. I think the best person who does this in the emerging landscape is probably Nicole Wishoff, with Wishoff Ventures.
She has over 100K, right?
She has 100K. Yeah. I'm assuming. Yeah, she is consistent. She's herself. And I think she's just authentic and isn't afraid to put her true thoughts and feelings and emotions out there in a way that just is very authentic to her and her strategy. So I commend her for that. For me, that's not authentic. And so it's harder for me to follow that exact same strategy. I use X mainly as a consumption and learning mechanism, as a networking mechanism. I interact with a lot of people there.
Yeah.
I like tweeting and sharing thoughts, but truthfully, it's not the core competency of myself or the firm. We get a lot more inbound on LinkedIn of all places,
right?
Which is ironically interesting.
Everybody shits on LinkedIn, but I think LinkedIn is still like a pretty good. I think like people just shit on LinkedIn on X because it goes viral, but
yeah,
I think it's still a very useful platform.
It's easy to poke fun at some of the content on LinkedIn. Yeah, I think that's the tip of the spear there. But LinkedIn is kind of like the old school database that at the end of the day isn't designed as well, hasn't had a new feature upgrade in a while, but still has everyone's contact information and is still a great way to connect. Yeah,
that's the personal CRM everybody uses.
Yes.
Right. Like X, I just wondered, is there benefit to going viral every now and then? Is there benefit to having like a dedicated marketing strategy? And then other times I think like people who tweet, is that all they do? Because
Yeah, certainly it seems like some VCs have a full-time job tweeting or some really
It
well-paid
really does feel like
ghostwriters.
that. Yeah.
That's not us, and I would way rather have
It's not
a
just me.
founder.
Like, it's very time consuming.
It seems very time consuming. And what I will also say is people are way more clever and creative than I always find myself chuckling at the creativity of other people
That's fair.
in venture and beyond. So
Yeah.
I think truthfully, I'd way rather have a founder referral from one of our existing portfolio companies than to have a tweet go viral.
What's your favorite all-time book?
All-time book.
Yeah.
There's no individual book. I love history, so I've read a lot of historical fiction and historical nonfiction. I love entrepreneurial stories, so I've read all of the kind of classic founder journeys and stories.
What's your favorite historical nonfiction?
I read Abraham Lincoln and Benjamin Franklin, 2 separate books, their biographies recently. Benjamin Franklin intrigues me, just as like a historical individual, thinker, inventor, very unique individual in history. So I wouldn't say that that's my favorite book, but it's one that I recently read. Yeah, I've been consuming podcasts more recently on the history side.
Right.
There's a podcast called The Rest is History, and it does a really good job of kind of going through. I mean, they have hundreds of episodes, so you can pick your historical event.
Actually, my phone isn't here. I started listening to a book on history as well. I'm forgetting the name of the author.
Yeah, no, please
audio,
share.
not reading. So
Yeah.
listening to the book. Yeah.
No, I mean, I've listened to, and as you know, we have a newborn at home that's 3 months old. So I took a few weeks off during paternity leave and was ripping through some great history podcasts. So I think I listened to one on the French Revolutionary War, the American Civil War, the Vietnam War, Genghis Khan, and the entire conquest of the Mongols.
Oh, that story is just insane.
It's wild, yeah. A lot
wild.
of modern society in terms of religious tolerance, in terms of the postal service.
The religious tolerance was just commendable.
It came from Genghis Khan.
Yeah.
And despite the obvious terror and tens of millions of lives that were ended or upended by the Mongols, it's not to say this was only a force for good. It was highly disruptive. But I love pulling threads from Genghis Khan and understanding the influence he had on Thomas Jefferson, or understanding Marquis de Lafayette and what he experienced in the American Revolutionary War, and then what occurred in the coming decades in France during their Revolutionary War. So
did you take any of these history lessons and contextualize them for any of the founders in their entrepreneurial journeys, culture building, and
perhaps not directly in the sense of I've never quoted Benjamin Franklin or like Genghis Khan when speaking with a founder.
Hey, Ben Horowitz did.
Ben Horowitz did, yeah. I mean he certainly can do that. I think for me, I always love understanding the fuller picture and the human experience as much as possible. I think lessons can be learned from history, and so one of the very small pieces of history that I'm fascinated by, that I went deep on recently again, was the Enigma effort during World War II. Alan Turing and the code breakers in Britain trying to break the Enigma communications machine that the Nazis were using to communicate maritime.
There are a few good shows on that as well. Yeah,
movies and shows. And so, anyways, I'm just always fascinated by kind of these, no pun intended, hidden figures throughout history.
Right. Book you've heard recently, or you would recommend to founders frequently?
It has nothing to do with frontier tech, which is actually why it comes to mind. But it's just a raw story about entrepreneurship and ambition and going through hard times. Shoe Dog is actually quite good.
Oh yeah,
Phil Knight's book.
Yeah.
He's not from the standard venture ecosystem. Nike is not a modern venture-backed company. But I think it's for those reasons that I would recommend that one. It's just something different.
On my list. I still haven't gotten through
It's exceptional. It's a great story.
Yeah.
It kind of, it's been a number of years since I've read it, but it profiles his journey of selling shoes in the back of a van at track meets in Oregon, rural Oregon, all the way to the empire that Nike is today. And I think what's always helpful is founders love specific examples and stories of those breakthrough moments in a company. And maybe it provides inspiration to founders that are struggling to raise a Series A today in this environment, or are trying to negotiate with a large data center customer.
You just gave me an idea. Maybe there's an opportunity to, have a book, maybe not more than 100, 150 pages, just career breakthrough stories of all these exceptional founders.
Tim Ferriss has a book that kind of is a summation of a lot of lessons.
Oh,
but I don't know that it's just founder oriented in general.
I
so.
wouldn't even do it for the most successful founders. I would take these lessons from people who haven't yet made it, because so that you look at it and you're like, oh yeah, well they're just a couple steps ahead. They made it. We'll get through it.
Yeah. I love engaging in that type of content, whether it's podcast, books, or just conversation.
What's a favorite podcast and non-obvious one that you listen to?
It's probably This Rest is History one.
Oh, okay.
That I mentioned earlier. Yeah, I've been listening to that a lot recently. And then I listen to a lot of the obvious podcasts in venture.
Which ones?
All the obvious ones.
All the obvious ones.
All the obvious ones.
TBPN every day at 11 a.m. PT.
No, actually, I don't consume as much of that. There's just so much content. It's hard to.
Yeah.
I have a full day.
I know.
A work day as a solo GP, so probably not as much as consuming content during the day. More after hours.
And what's your favorite cuisine, food, after Pakistani food, obviously?
Pakistani and Indian food is up there for sure. Anything Southeast Asian.
Really? Okay.
Yeah. Asian writ large, but I would say Southeast Asian.
So is that why you always showed up to my dinners? Now I'm like,
now you're
I'm connecting the dots. Is it?
Well, not only is it great entrepreneurial and venture conversation, but you have incredible cuisine. You're going to have a strong attendee list.
Any TV show you've seen recently has been? Favorite?
No, with a newborn and running a venture firm, there's not much time for TV. I watch sports occasionally, and then I'd say our favorite show over the last few years is a TV show called Peaky Blinders.
Oh my God!
And they're coming out with a movie on that, and so
oh yeah, Peaky Blinders was incredible.
It's a top-notch show. In fact, I have two younger brothers, and during it, maybe as any other people who have watched the show will internalize. I texted them immediately that we needed to start a family business. I didn't care what it was, but just the thrill of starting a business with your brothers, watching that show.
Did it go anywhere?
Yeah.
Not yet.
Oh, what's that?
Did it go anywhere?
No.
Are they joining the firm?
It did not leave the text thread. And I don't know. I don't know that it was a serious attempt, but it was more of a just an emotional tug pull of watching the show.
Maybe in 5 years. SpaceVC is Lacoste brothers, and it's
it could be. Yeah, who knows?
And it's not like 50 million AUM, it's 500.
Lacoste and Co.
Lacoste and Co. Like who knows,
Based in Manchester, England. Yeah.
I don't know if that's where frontier tech is happening, but
you never know. That's the beauty of frontier tech, is it's always there to surprise you. But I doubt it's Manchester, England.
Well, we'll maybe wrap up with, this is like a new fun question I'm asking, because there's a dinner debate series I went to recently, and there's always this question that comes up, which is, I think, like the Peter Thiel question. What's the contrarian belief you have that most people disagree with you on, that you recently discovered?
As it relates to venture, I'm becoming more and more a believer in the concentrated strategy and the fact that there may be too many venture capital firms that exist, and that you could see a consolidation period bigger than what people anticipate. So I don't know if that's contrarian, but it is a view that I'm certainly open to, depending on kind of the macro financial situation and the corrections that we could see in the future. I think the spicier version of that would be that, largely there are more VCs and venture capital firms than we probably need. But what I love about it is that you also have the opportunity to prove yourself, and new firms like ours can come onto the scene and let the track record speak for itself. So I'm a fan of new firms getting started. I'm a fan of many of the firms, many of the VCs and the firms that exist in our ecosystem today I love. But it has become quite a mass market ecosystem. And so my contrarian thought is that maybe it would be actually quite healthy to have a big consolidation period.
On that note, Jonathan, thank you so much for coming on the show. It was awesome.